Hey friends, happy 5 Minute Friday and Happy New Year. We are still only a weekend, right? We are still allowed to say that. So happy 5 Minute Friday, the first of 2022. So today being the first Friday of the month, I hosted my open office hours on Zoom. So we just wrapped that up. So I am doing a recap for you here on some of the questions that came up. And my theme for this month was doing a year-end review. So let's jump right into some of the topics there. So we had a really great group, a really great session that popped on live and asked some really great questions. So I was able to demo some of the instant assessment calculations and worksheets that I use, and actually put some real numbers to it to answer some questions that came up. But overall, we just did a brief overview of what is Profit First and why it's important, especially if you have never had a business background before, or if you're entering in a startup capacity versus entering, doing an assessment for an already existing business. Then we had some specific questions about setting money aside for taxes. Like if you, depending on your business entity, the question was, if I'm an S corp, I'm already a W-2 employee, so I already have taxes that are taken out of my check. Why would my business need to set aside money for my personal taxes? And yes, this is where the Profit First method differs a little bit from the general accounting rules about your business not paying your personal taxes, right? But the viewpoint is that if your business is the only thing that exists to give you revenue, it is the reason you have a income tax bill, then certainly you want to set that money aside and be able to access that cash for you being the owner of the business, access that cash to be able to then go and pay that tax bill. Okay, so that's a whole reasoning behind it. It's not so that you just pay yourself a salary and then you have to expect to save some of that salary on your personal side to pay for your taxes. No, if the business is the one generating the revenue, then also just set aside a little nugget of cash there on the business side to pay for that. So big question that came up. Another one was, not exactly using Profit First, but setting aside a monthly amount to, contribute to your estimated tax bill and your IRA, but then not really knowing where the rest of the cash goes. Well, an IRA is an investment for your retirement. So I view that more as an owner's comp. So with that example, we're able to run down through the numbers and come up with some real percentages for what needs to be set aside. And then I would also just make that distinction between the two. One of our guests today also talked about the app that's called YNAB, which stands for You Need a Budget. It talked about specifically there is apparently a community on Facebook that is YNAB plus Profit First. So I am personally going to check that out. YNAB is an app that you can use, and rather than opening up the bank accounts and doing more bank balance accounting, it's that you have an app where you enter in how much money is in your bank, and out of that amount of money, you deem what needs to be set aside or what is allocated for certain things. So if you know your licensure is coming up, if you know you're saving an amount of money for a piece of equipment, for your taxes, et cetera, it's just a way to section out the money that you have in a budgeting app. Okay. So I don't use that personally, but I, have friends and colleagues that have used that before. And it's all really just about whatever's going to work best for you and your habits. You don't have to live by the book Profit First exactly how it's done. You can use the methodology to make it work for you and work towards your own financial goals based on what the recommendations are for your stage of business and your personal finance goals. So some of the things that I wanted to specifically talk about with doing year end is, number one, do you have a year end review process? I love to get together and just look at the whole year as a whole, compare it to previous years, and this is how we set realistic goals. Okay. Sometimes in business, especially in retail industry, they will always just slap an arbitrary, let's improve by 10% next year. And that's what all the sales goals need to be. Does that really work for you and your chiropractic business and where you want to be? Maybe you have more monetary saving goals, or just personal goals. And so you need your business to back up paying for your lifestyle, right? So maybe that's not always just that arbitrary 10%. So we want to be able to look at the trends over the whole year, look at what first quarter does versus fourth quarter, second, and third mixed in there too. Sometimes we can hit a little bit of a panic mode when it comes to first quarter, because depending on where you are geographically, and just where we are with current times, you could have a lot of patients calling out right now, right? You could have deductibles and just their own personal cash flow for coming out of the holiday season is impacting, following through on care recommendations. We have infectious disease this time of year. We have weather. So you just have to be aware that sometimes January and February can be a little bit of a mixed bag, but almost across the board, every single client that I have worked with, March is a sensational time to be a chiropractor. Okay. So we just have to know that the things that you're doing in January are very intentional for what you know is going to be, it's going to be turned around, right? Things are going to look better. So I introduced this concept of leading versus lagging indicators. And that's, measuring the distinction between things you can control and things you can't. So leading things are things that you can control. You can control what marketing outreach you have in your business, what your impact is in the community, things like that, the things you take action on. Okay. The lagging indicators are all of what you put out into the universe coming back to you. When that new patient calls to schedule, when that patient at your front desk decides to reschedule, et cetera, et cetera. Those are the things that, despite your best interest, you cannot absolutely control the nature of the humans that you do business with, right? But you can control the action that you take in your business. So very much, I want you to make sure you are taking action in January and February, and we're setting up success for the year, as long as you are healthy and able to do these things. So I know this is an incredibly rough time for us, still a lot of us. So just give yourself some grace, give yourself some time to heal, and make sure that you're starting off the year with intention. That is what I wish for all of you. See you next week.